Ty, how you doing today? What's going on?
I'm awesome, man. Can't wait to talk.
Yeah, cool. So I'm Nick Harrington. Ty Ash joining me as well here. For a recap, this is our segment all about how to invest in real estate. This is part two. In the last episode, we talked more high level about why someone should invest in real estate and talked a lot about the first step of just getting your mindset, talking through why we each invest in real estate. Now, if you're watching this, it's probably because you will now want to know what's next. You want to know, okay, yes, I want to invest. How do I actually take those tactical steps to start making this a reality? And that's what we're going to talk about today. So hopefully you can walk away from this with just a good understanding of what can you do today to get that much closer to getting your first investment property. We're going to walk through helping you find a strategy and your criteria for your investment, how to get your team in place, and then also talk through running numbers as well. Ty, did I miss anything there?
No, that sounds great agenda. We can dive right into it. What's first?
Cool. So I think the first thing that we should talk about, someone wants to invest in real estate. The next most important thing, in my opinion, is choosing a strategy and kind of narrowing down what we call the buy box.
Mhm.
You want to talk about that a little bit and just kind of the importance of having a strategy in place when it comes to finding your first deal?
Yeah, whether it's, refining your criteria or if it's your buy box or any of these other, synonymous terms, what you're trying to do is one, make sure that you're not looking at every single listing possible that's in this entire MLS. And usually that it consists of is what strategy you're using, meaning like a long-term rental or buy and hold rental, a house hack, or like a fix and flip are try probably the three key strategies. So that's like step one. Step two is, which, house style. Is it a duplex or a single family? Is it, do I like 3 bedroom, 1.5 bath, or do I look like really small 2 bedroom, 1 bath homes? And then the location also matters, and having those inputs, but making sure that they're not all broad where I'll do single family or duplexes. I'll do any of the cities in this 15-mile radius. Being too broad does you a disservice of you're going to have way too many opportunities, is I guess what I'd call you, to run numbers, and you're going to get fatigue. You're going to burn out, not be able to run those numbers each day. And even though you might find a deal every single day, you're going to be worn out by the time you actually get to the one that is and not want to go any further. And then on top of that, as we kind of start talking about you building your team, having too large of a search radius or too many criteria that pulls into too many opportunities into your box is going to be unsustainable for your teammates, specifically your agents, because if you're working with a professional, experienced real estate agent, they probably have a variety of clients they work with, and they need to know exactly what does Nick want, so that when they see that just randomly as they peek through the MLS in the morning, maybe on the daily hot sheet, new listings that come up, maybe it does trigger their mind, but it should not be the expectation of your agent to send you a deal every single day. Making sure that they understand where your criteria is and help you bounce it off is super important.
Yeah, I love that. And we work with a lot of investors that are maybe first starting in their journey or that have a couple hundred doors. And the ones that we see that succeed the most are the ones that have a very specific strategy that they're targeting.
Yep.
And if we talk about the three main strategies, you mentioned this, that most people are going to use, house hacking is one, buy and hold is two, flips are three. And I think it's very important for your first deal to choose one of those strategies, commit to that strategy, understand it, and choose that and go forward with that.
Yeah.
And so if we talk about just high level of these three strategies, explain to me, let's start with house hacking.
Yep.
What is house hacking and who would be a good candidate for house hacking?
Yeah, I would say most people are a great candidate for house hacking, whether it's in a small multifamily like a duplex or even in a single family and renting out your bedrooms. I think most people are, not realizing they're house hacking when they actually are. So I think it's a great fit for everyone. Sometimes the people that are more resistant to it is people that are further along in like the development of their family. They don't want to be as uncomfortable of either sharing their space in a duplex or actually sharing your living space inside of a single family. So those would be maybe the people that would avoid this. But it's great for everyone just mostly because of the low down payment needed to get started using loan programs like FHA, which is a 3.5% down. A lot of times there's portfolio products at local banks where they will allow you to do up to a duplex or 5% down. usually with a good interest rate as well. So like the financing and the ease of starting is great, and also has the benefits of if you live in one side of the duplex and rent the other side out, it's going to be highly likely that you're going to be having similar living costs to renting, but definitely lower living costs than if you were to buy a single family by yourself. That's a little bit of the basics of house hacking.
Yeah, and I think house hacking is the lowest barrier to entry for anyone that wants to get investing. You're basically offsetting your mortgage, whether it's with a duplex and having someone else pay their rent, or buddies that you're living with living in your bedrooms. So I love that. Helps you to build equity in a property, low down payment, reduce your cost of living expenses as well. And then hopefully the goal is if you do move out of that, you've got now a cash flowing property that's fully
Yeah.
occupied. Um,
And
so
it's kind of like the sampling of landlording, because you usually only have one person to manage. So you can really see, is this a good fit for me, before you've all of a sudden bought multiple properties, or maybe you've bought a 4-family, but bought it conventionally speaking. It's a good way to dip your toe in the water to see if it's for you.
Yeah, love it. So that's house hacking.
Yeah.
I'll talk about buy and hold, which is the second strategy. That's essentially you're purchasing a property strictly as an investment. Typically, this is going to be a 25% down. Someone that's going to be a good candidate for buying and hold is going to be someone that first off has the capital to
Yeah.
pay 25% down on a property. And the big things that you're looking for is what I have worked with a lot of investors is they're after that cash on cash return. And without getting too in the weeds, basically, is the property making them money every month once they collect rent and pay all their expenses. I think a buy and hold, that's typically then someone that's looking to scale their portfolio, or maybe if they're investing out of state, that's going to be the best option as you're accumulating properties. You've got cash flow that's coming in month to month. You're probably not getting rich off of that cash flow, but you're
Yep.
paying down equity with it. You're paying for your property repairs, maybe have some mailbox money coming in the side. But 5, 10 years from now, all of a sudden you have an asset that's appreciated in value, has someone else paid for, and you can now sell that. You can now do like a refinance. You can do a 1031, all these fun things that could happen down the road. So that's the buy and hold strategy. And let's
Yep.
talk about the flip strategy as well, Ty. Tell us about
Yeah.
that.
I think this is probably the strategy that people are most familiar with, or maybe the most comfortable with, because there's so many TV shows that maybe glamorize the fix and flip strategy of buy a home that's the worst home on the block, but is in a great block. All those good things. You've got good, we call them after repair value, comparable sales nearby, where you want to get a good deal. Maybe it's got, maybe it has to be purchased with cash or hard money financing because it's non-financeable through conventional or normal owner occupant strategy or loans. And essentially you're coming in to add value and get it ready to go for somebody to come move in most cases, probably an owner occupant moving in as a primary residence. So most time we're seeing people do these on single family homes. They're trying to find the biggest market that they can serve. So like a 3-bedroom 1.5 to a 2-bath here in our Milwaukee area is a great first time home buyer product that can be presented, and you're going to have a large buyer pool for. So those are like some of the basic things of what it is. What else do you want to add?
I think you nailed it. I think someone that's a good candidate for a flip would be someone that either has the cash on hand to pay for the down pay or pay for the home and the repair costs, or you could use other creative financing options to cover that. You either need to understand if you want to do that work yourself, if you're handy, or hire a general contractor. I think flip's a great way to build short-term capital, because that's what you're after with the flip, is basically that paycheck at the end of it, versus a buy and hold is a little bit more of a long-term game. So both are great options though. So we've talked
And
about
house hacking and the buy and hold are very much more passive. It doesn't mean that you're never looking at it and it just runs itself, but day to day, you can go days, sometimes weeks at a time without actually having to put active energy into it. But you're definitely wanting to keep an eye on your investments, as opposed to fix and flip is definitely a active business, and it's taxed accordingly in terms of how it actually flows through and into you at the end of the year with the IRS. Again, we've got passive activities of owning investments, and then we've got the fix and flip, which honestly has a huge, tax liability associated with it. So you got to make sure that you don't miss that in your costs of doing a flip. So that's
Cool.
one, if we're bucketing even those 3 strategies into, further categories.
Love it. So we've talked through the main strategies that investors are using. Based on what your personal situation is, you're going to find which one makes the most sense for you. And so we talked about how important it is to have a strategy, choose one, and to go with it.
Yep.
Because once you know what your strategy is, once you know that return that you're after, you're able to really then narrow down your search to find that property. Because otherwise, if you are like, I'm open to whatever, I don't care, all of a sudden you have 100 listings that you're going
Yeah.
through versus you can just do a quick look and see there's 5 listings today that I'm going to run numbers on, which ones make sense. So we talked about the strategy, how important it is to have to that. The specificity of it, it's going to help you out even more too. Anything else you want to add to that side of things there?
I don't believe so. No.
Okay. So let's kind of, you now at this point, you know the strategy you're running, you're narrowing in your buy box, the neighborhood, the location, the returns that you're after. Let's talk next about then how you get your team set up. And when we say team, what that even means.
Yeah. I think like as we go into this, you said it before we hopped on here, these things are all kind of happening simultaneously at the same time, where you might get like the basic information of, I know I want to house hack and I know I want to do it in Milwaukee, but I don't know as much about it because maybe I'm not originally from here. I generally know maybe because I've lived here a couple of years, but where should I be investing? Where's the duplexes? Like that might be the time where if you get stuck because you don't have an answer, and I know there's a book out there for who, not how. It's not how do I find this information of the best spot, but who might actually have the information. And that's when you start reaching out to your agent to help you line that up. To talk about your team in general, it's going to consist of a real estate agent and a lender, as well as somebody to do property management, which it could be self-management as well. Usually the agent and the lender are the very first two that kind of get identified, because you need to know, one, can you actually get the financing to purchase? And then they'll usually connect you with an agent, or vice versa. You'll find an agent because you want to know, am I going to be searching in the right area? Is the opportunity that I'm looking for actually real? And does it exist? Usually those are being found at about the same time, and both are going to help coach you through what can you afford. And the lender's going to be more from a, what are your assets? What's your income? What's your credit score? As opposed to the agent's going to be more focused on, can we help you find the numbers that are going to work for your situation? Those are the 3 key members that we're kind of finding. They're the who that can helping you with the how to get it done.
Yeah, I think that's great. And like they all play very different roles in the whole life cycle of investing. I think you kind of nailed this on the head. When it comes to your agent and your lender, they're very much involved on the front end. You know, your lender is making sure that you have the money, the means to purchase. Your agent's helping you to find that deal and helping you with numbers and returns and kind of guiding you along that process and getting that under contract. And then your property manager, if you want to use a property manager, which we'll probably have a separate episode about self-managing versus a property management company, but they're kind of like your long-term partner once that acquisition phase is over. You know, like the education phase, the acquisition phase, and the management phase. That's when that property management company steps in to be sure that your investment is getting the most of its return long term.
Yep.
Let's start with just the agent and the lender. If you are someone that you're like, hey, I want to do a fix and flip, or I want to do a buy and hold, you've kind of got this narrowed down. How do you go about finding a real estate agent that could help you out then?
I mean, I think there's a couple good sources to check. I mean, I would say Google is a good spot to start to see, who are some of the top agents. But one thing I'll say is, unfortunately, most of the time, the very top agent in your area is usually not like the number one investor friendly agent in your area that understands analysis. They might understand it, but they're going to be more focused on, in what case, some cases, is the low hanging fruit of the traditional home buyer and seller. So there are resources out there to help you find a real estate investor friendly real estate agents. Like Bigger Pockets is, a place that we engage in the forums. We try to give back to the community. And a lot of times we get direct messages or get connected with investors to help that are interested in the Milwaukee area. That's one way to find the real estate agent. And I'd say probably that some of the most important questions, and I'm sure you'll probably add to this, is tell me about the investments that you have and how you got started investing, because hopefully your real estate agent that's helping you with your investments has experience, has the contacts, and can guide you through some of the hurdles that you're going to face along the way, as opposed to saying, yeah, I can show you how to buy it. I've never done it myself before, but I know if you buy a duplex, it should work, right? Any other questions you can think of to ask?
Yeah, I think to me, finding a good agent is very important, especially if you're new to the investing space. I think it's very important to also understand that your real estate agent is not going to be the one to find you a deal. Typically, they're not going to be the one to crunch numbers for you. Think of them as like an advisor or a guide. But as a buyer, as an investor, the onus typically is on you to run numbers, to find those deals, to raise your hand to say, hey, this is the property I'm interested. Agent, can you help me out? Can we go see this? Can we look to see if this is a good investment or not? But I think the most important thing with working with any real estate agent that is working with investors is understanding, like you said, have they done this before? Do they
Yep.
know the market? Do they have clients that work in the investing space? Do they just have the overall know-how of financing options and creative financing and things to look at for an investment and things that maybe aren't as important for an investment property? Um, I think just asking questions when you're interviewing agents is like, what's your experience investing? How much of your business is working with investors? Um, I always think too, you want to find an agent that's going to educate you. And so
Mhm.
if you walk away from that conversation and you feel like you didn't learn anything, maybe
Yep.
it's worth interviewing a second or a third agent.
Yeah.
I think that's a big part of being an agent is also kind of coaching your clients and then letting them know what is realistic and what isn't realistic. And you want to
Yeah.
work with someone that's going to be honest with you and that's going to tell you how realistic your goals are and not. Because then otherwise you end up with this uh, expectation that's going to be way off. And it's better
Yep.
to have someone that's going to be honest with you and upfront and has experience doing this too as well. Um, Anything else you want to add to that?
No, I think you nailed most of the important things. Maybe the only thing I'll add is it's a relationship that you're building. And one, I'll talk with some of the worst things to do when you're trying to build a relationship with an agent is, hey, can you start sending me your deals? I'm interviewing multiple agents and just trying to see who can get me the deal I'll work with. Can you help me with running my numbers? Asking for the world, but giving nothing in return and expecting after one 30-minute phone call that they're going to be giving you every great deal that comes across their desk. It's going to take, hours, meetings, showings, you having pre-approval to actually go get the financing, proof of funds, to actually get the commitment level from your agent, because this is not a easy or non-time consuming business of real estate investing. You're going to both be investing a lot of time into each other, and the people that lean into those relationships the most get the most attention and service from their agents because of how high touch real estate investing is.
I'm with you. Like, help your team help you. And
Yeah.
that means that you need to, as an investor, do work yourself too.
Yeah.
And I'm always happy helping my clients run numbers if they're clearly putting in the effort to run numbers themselves,
Yeah.
to guide them. But if I think it's like you put into it what you get out of it. You get out of it what you put into it, I think is a way to say that.
Yeah.
And that's the same way with
Yeah.
any business, especially real estate investing as well too. So we've talked about the strategy, your team.
Mm-hmm.
What do you think is a good next step then from there for someone at a high level that they can start doing too?
I think we've alluded to it already, but you've kind of identified the strategy. You've identified the team member. At this point, I think it's you kind of get into this rinse and repeat cycle of you probably have access to the MLS. Maybe you've got connected to some wholesalers and got on some mailing lists. It's really about creating routine. I think we talked about this early. It's not about I'm going to go buy a property. I'm going to now create a new habit where I'm a real estate investor, and each day I do these things. I look at the MLS. Is there any that fit my criteria? I run my very quick numbers. Is it worth going one step lower and doing a more full analysis on it, and then sending it to make it aware, bring awareness to my agent that there's a deal that I might like, and go through that funnel. And not every single day is going to have the result of doing further due diligence. There might be some days where no opportunities fit your box at all, but it's all about creating bless you. It's all about creating a habit, as opposed to, I think most people come into this year or this 3 months or this quarter, I'm going to go buy a property and I'm going to lean into it, but they never establish the habit that you need to become a real estate investor full time.
Yeah, I'm with you. I think we've talked a lot about running numbers.
Mhm.
And when we say running numbers, we're talking about calculating deals,
Yeah.
calculating the return on a deal, whether it's a house hack, a flip, or a buy and hold. we've got tools that we can send you, spreadsheets. Bigger
Yep.
Pockets has a lot of calculators. But the more comfortable you get running your deal analysis, first off, the faster it's going to go for you, the better you are going to be able to spot the deals that you want to pursue or not. But I think the routine is so important. If you also, I think too, saying, hey, I'm going to buy a property in the next 3 months and I'm committing to buying a property in the 3 months, chances are you will buy a property in the next 3 months if you're taking the steps you need to do every single day to make that happen. Which to me, the daily action or even the weekly action is setting a goal of I'm going to analyze 10 deals this week or an hour a day or 10 minutes a day, whatever that is, creating that routine of analyzing deals. When I first bought my duplex, I almost got stuck in that phase of analyzing for too long. I think I analyzed for 8 months until I was finally like, what am I doing? Like, I've seen so many good deals and I'm just afraid at this point, which is normal to be like afraid of that first deal, like jumping in the water. You know, you're like looking over the diving board and you're like, do we jump in? Screw it, I'm gonna climb back down. But what that did though is it equipped me to understand when a deal popped up, I let my agent know. I wasn't an agent at the time. And I said, hey, this is good. This hits my numbers. Let's go see it. And that showing was more just a confirmation at that point of the numbers that I ran, which I think is a great way to view it too. When you first get started, it's probably going to take a little bit more steps to start seeing them in person. That's part of the education process, is going to see homes in person and go on showings. But running numbers is so important because you need to be confident with your numbers. You need to be confident with your investment, and how you do so is understanding the numbers of that investment.
Yeah, I think some of the things that are the hurdles that some investors just never get over are the first conversation they have with us. They realize they maybe haven't saved as much money as they needed to, even though they've maybe just made a considerable, they've saved 20, 50, $100,000. And now I just can't wait another minute. I need to buy something cheaper. Like, I think that's a hurdle that people will run into. I think it's I haven't read that one last book about X, or I haven't learned that skill yet, so I can't dive into it. And that's a reason I should not pull the trigger, even though I've ran enough deals to know it is a deal. I think those are like two hurdles that I see people run into all the time. And I think the other one that I ran into personally is not spending a few dollars here and there to essentially give yourself the tools to make it sustainable for you to run deals. And some of those tools that I'd reference would be Rentometer for rental estimates. It's getting like a Bigger Pockets Pro so you can like have some of their really good analysis tools once you want to do like a deeper dive. If you're not necessarily Excel savvy, like a few $100 can make it to where you can analyze deals in seconds as opposed to minutes and 15 minutes per property. That's going to make it sustainable. I think I had that same thought of, well, if I spend $500 on tools, that's going to ruin my investment or my return on investment. And then, I think some people get to the point where they just never buy at all because they didn't spend $500 for the tools that they need. So those are some of the hurdles I think people dive into in the stage where they finally have what they were looking for in front of them, but they don't pull the trigger because they potentially haven't had the right advisor to help them through that.
Yeah. And I think too, with that, like the hardest part of investing, I would say, like on the front end, there's going to be hiccups. It's going to be new to you. So running your first deal is probably going to be frustrating. It's going to be time consuming. But like the first time you learn to ride a bike, I don't know if anyone when they were 5 years old that hopped on a bike was able to ride a two-wheeler for the first time. But it's one of those things where it's a challenge, but it's rewarding. And I will also say that I don't know if there's ever been an investor, maybe I'll just speak to myself. When I bought my first property, I don't know if I was fully ready, even though I spent 2 years up until that point researching and analyzing. And so no matter how much research you do, how much analyzing you do, there's going to be a point where you are prepared, you are equipped, you are ready to make that decision. And it's just taking that plunge and doing it. It's always going to be easy to say, I need more information. And if that's the mindset that you have, you're going to end up never buying a property.
Yeah. And I think the last key team member, which I guess I'll put into this theme that we're leaving out so far, but super important, is like your network of other investors. Like there's a lot of usually local meetup groups that you can attend that a lot of the times people that get into investing are either competitive, maybe they have like a sports background and it's like, I'm doing this, I have to be competitive, I have to go get the deal. But then you realize how much of a team sport it is, including other investors that might also have the same criteria and same strategy and look in the same location as you. But guess what? You can't buy everything. At least most people can't. And most people are looking at the inventory that we're looking at, the strategies we're looking at, are having the same challenges. And if you're not surrounding yourself with a good sphere of people that have had the challenges like you ran into, like I've run into, that other people who are non-real estate agents have run into, and they're like, yeah, it's just part of the process. If you're not surrounding yourself with those people, you're going to feel like you're going it alone. And the rest of your normal sphere, for the majority of people who are not real estate investors, are going to be the voices you hear in the head of, this is a bad idea. How are you doing this? That doesn't make sense. That's risky. If you're not surrounding yourself with the full team of agent, lender, property manager, and network, I think you're going to find a lot of headwinds of getting started and actually pulling the trigger.
Yeah, that's a really good point. Yeah, I love that.
Yeah.
Well, cool. Well, we've touched on a lot today. I think we've got everything covered that I wanted to talk to. Is there anything else that you want to touch on here?
No, I don't think so. I think, do we have an idea what the next topic is that we're going to dive into?
I think we've done a good job with just like the next steps. Maybe we can like deep dive further into each of these strategies. Maybe we even like run numbers on deals, talk about like self-management versus property management. And if those don't happen in the immediate next episode, there are things that'll come down the road too. But I think this was a good session here.
That sounds great. Well, appreciate you jumping on, and we'll keep the content coming in terms of how to invest in real estate, and obviously with the nice little highlights of how to do it specifically here in Milwaukee.
Cool. Thank you, Todd.
See you, man.